The Nasdaq is quiet, and the market is of course closed for the weekend. Critical Metals Corp., ticker CRML, finished Friday's session on October 31st at $12.94 a share. It was up about 0.47% on the day, but the real story was in the after hours, where it slipped back down to $12.83, shedding another 0.85%. This brings a moment of quiet to what has been one of the most volatile and debated stocks on the market. When you look at the chart, the first thing that jumps out isn't the daily move, it's the staggering 52-week range. This is a name that is traded as low as 1.23 and as high as 32.15. That isn't a stock chart, it's a fingerprint of a battlefield, a place where fortunes have been made and lost in a matter of weeks. The sheer violence of that volatility tells you this is not a normal investment. It is a pure high-stakes speculation on a very specific future. The general belief, the story that has pulled in so many retail and institutional participants, is that Critical Metals Corp. Is a key to the West's independence for strategic minerals. We're talking about rare earth elements, the materials that are indispensable for everything from F-35 fighter jets and wind turbines to the magnets in every electric vehicle. The expectation is that because its primary asset, the Tanbreez project in Greenland, is so large and located in a stable jurisdiction, it's a guaranteed win. The narrative is that Western governments, desperate to de-risk their supply chains away from Chinese dominance, will backstop this project no matter what. This belief is what took the stock from around $8 in early October to a high above $30, a truly explosive move. But the reality on the ground is far more complicated and carries a level of risk that the optimistic narrative often glosses over. The truth is, Critical Metals Corp. Is a pre-revenue exploration company. Digging into its financials, you'll find it generates less than $1 million in revenue and has seen its earnings decline significantly. More alarmingly, on October 6th, the company's own auditor raised a going concern doubt. This is a formal warning that the company may not have enough capital to continue operations over the next year. This single fact stands in stark contrast to the story of a future industrial champion. The company is burning through its cash reserves, and its entire valuation is pinned not on what it has, but on what it might have years from now if everything goes perfectly. To understand the recent price action, you just have to follow the newswire, which has been a flurry of activity. The company has been aggressively raising capital to solve that going concern problem. On October 6th, it announced a $35 million PIPE financing. This is private investment in public equity. While the capital is good, the terms are what matter. That deal brought in cash by issuing 5 million shares and a staggering 10 million warrants with an exercise price of $7. Just 10 days later, on October 16th, it announced another $50 million PIPE financing. This is a massive infusion of capital, but it comes at the cost of significant shareholder dilution. Every new share and warrant issued means the existing shareholders' slice of the company gets smaller. This overhang of warrants at $7 also creates a potential ceiling, as any move above that price could tempt warrant holders to cash in, creating selling pressure. On the other hand, the company has been executing on the narrative. The recent offtake agreements are significant. It signed a letter of intent with RE Alloys for 15% of its future Tanbreez production, which followed a 10% agreement with Ucore. This means 25% of its projected output is already spoken for by US-based processors. This is crucial validation. It proves that if critical metals can get the minerals out of the ground, there is a desperate and waiting market for them. Even more telling was the October 22nd appointment of retired Rear Admiral Peter Stamatopoulos to its advisory board. This is not a typical mining company appointment. Stamatopoulos is a logistics and defense supply chain expert. This move screams geopolitical asset. It reinforces the bull case that this company is positioning itself not just as a miner, but as a strategic partner for U.S. national and economic security. This is the news that has captured the imagination of the retail community on platforms like Reddit and X, where discussions have been intense, with many seeing these moves as confirmation that the company has powerful backing. Now, we have to talk about the elephant in the room, the short interest. According to data from multiple providers, the short interest as a percentage of the free float is sitting at over 31%. Let's be perfectly clear, that is an exceptionally high number. This means that for every 10 shares available to trade, 3 are held by sophisticated traders and institutions who are betting, and betting heavily, that the price will go down. This is the other side of the battle. The short thesis is built on those fundamentals we just discussed: the going concern warning, the negative earnings, the massive cash burn, and the severe dilution from financing. Shorts are looking at the balance sheet, which shows a quick ratio and current ratio of just 0.13, indicating a serious lack of short-term liquidity. They are betting that the company cannot fund its massive development costs without diluting the stock into oblivion, and that the story will collapse under the weight of financial reality. What's your take on that 31% short interest? Is it smart positioning against a pre-revenue company, or is it a sign of a massive squeeze building? This tension is precisely why the stock is so volatile. It's a tug of war between the story and the balance sheet. For investors, this presents an actionable item. You need to know how to track this. You can find short interest data on financial sites like FinViz, Fintel, or Chartmill. You should be monitoring the days to cover ratio. This number tells you how many days it would take for all the shorts to buy back their shares based on the average trading volume. A high days to cover number combined with high volume and positive news can create a short squeeze, as shorts are forced to buy back shares at any price to close their losing positions, which only pushes the price higher. You should also watch the borrow fee rate. If this rate spikes, it means it's becoming very expensive for shorts to maintain their positions, which can also force them to cover. But a word of caution: attempting to play a short squeeze is one of the highest risk strategies in the market. It can backfire violently if the short thesis proves correct. So what does this company actually own? The crown jewel is the Tanbreeze project in southern Greenland. Its claim to fame is that it is potentially the world's largest deposit of heavy, rare earth elements. These HREEs, like dysprosium and terbium, are the most valuable and most constrained. They are what's needed for the highest performance magnets that can withstand extreme temperatures, which is exactly what defense applications and high-end EV motors require. The company has also noted progress on its bankable feasibility study, which is the detailed technical and economic plan needed to get project financing. It also owns the Wolfsburg lithium project in Austria, which it has described as Europe's first fully permitted lithium mine. This adds another separate critical mineral to its portfolio, diversifying its exposure. Looking ahead, the future of Critical Metals Corp is a study in contrasts. The bull case is clear. The company uses its newly raised capital to resolve the going concern issue. It completes the Tanbreeze feasibility study. Driven by ongoing geopolitical tensions, it secures U.S. or European government grants, loan guarantees, or even a direct investment, cementing its status as a strategic asset. The 31% short position is forced to cover, and the stock retests its $32 highs as it moves from an explorer to a developer on a clear path to production. The analyst ratings reflect this confusion, with some issuing sell ratings while others hold strong buy ratings with price targets around $12 to $14. The bear case is just as clear. The going concern warning was not a technicality, it was a prophecy. The company continues to burn cash. It is forced into more and more dilutive financing rounds just to keep the lights on. The 10 million warrants at $7 become a permanent wet blanket on the share price. The logistical and financial hurdles of building a massive mine in Greenland prove too high. The short sellers are proven correct, and as the retail enthusiasm fades, the stock price bleeds back down to its financing levels. This is clearly a high-risk, high-reward situation. Comment below how many shares of CRML, if any, you're holding and what your price target is. In the end, Critical Metals Corp is not a stock for the faint of heart. The expectation is that it will become a Western champion in a sector vital to national security. The reality is that it is a financially fragile, pre-revenue company fighting for its life
even as it signs major deals and adds high-profile advisors. The stock is a proxy for this conflict. The winner will be determined not just by the grand geopolitical story, but by the far more mundane realities of cash flow, dilution, and operational execution.